Welcome to Markets Now. I'm Michelle Work with Brad Kooima Kooima Varilek. The livestock futures, soybeans, all to the plus side here in the early portion of this session with wheat and corn lower. And Brad, let's talk about the cattle market. We did see kind of a lower day yesterday, kind of got caught up in some of the risk off here with the Middle East conflict, but back up today, kind of nice.
Nice to see it. Thanks for having me on. And you're absolutely right. As we visited a little bit off air, in terms of, I'm tempted to not even talk about the Middle East thing, but obviously it's a big deal because uncertainty is bearish cattle. It's just
right.
The way it is. But if we were to only talk about cattle fundamentals, I'd feel pretty good about things. Cash market firmed up late Friday. Opportunity here to sell cattle $1 to even instances $2 better than you could have in the middle of the week. Not big show lists at all. And from a seasonal standpoint, the show list that we've got here locally is maybe 20 to 25% of what it often is. I mean, it is dramatically lower.
Wow.
I still feel like you've pulled ahead this whole calf crop. Guys like the price. We had a tough winter. We had a tough summer for heat. Cost of gain up until just now was still high. Guys had the highly incentivized to be current and pull cattle forward. And I believe that's what we did. Now I keep hearing stories also of cattle being sold up here and exported to the south, to Kansas, and even in a few cases all the way down to Texas. So that would tell me that they must not have an oversupply of cattle, or why would they be paying the freight to haul cattle all the way down to there? So box beef up a little bit. Looks like there's still some profitable margin for the packer. But those are the cattle fundamentals. The broader picture, of course, Michelle, we have to worry about whether you get into something like 9/11, where people froze up, locked up, didn't dare to go anywhere, didn't dare to do anything. If this spreads, this terrorism spreads to something more local, clearly it'll impact demand, and it certainly will have an impact on cattle prices, which are historically high, of course.
Absolutely. Of course, that did spook some of the funds. They have been liquidating. Do you think they're going to liquidate a lot more? And from a support standpoint on the charts, we've kind of held where we need to anyways, haven't we?
Excellent point. Basically, when we rallied the cattle out of here, we threw on 30 to 35,000 open interest, and then quickly took it right back off on this last break. Open interest back under 300,000, which is disappointing. On the other hand, one could say that, well, they do have a keg of dry powder now. If they decide to come back, that they would have some bullets. Also the case of the hogs liquidating open interest. And that's what happens, I think, Michelle, in a market where there's uncertainty. You got the long speculator, and maybe even the short speculator, but particularly the long speculator is like, I don't know if I want to be part of this deal, and you see him go to the sidelines. Now, stock market's higher. If we can stabilize this whole situation, if this is a short-term rather than a long-term thing, I would say that, they'd come right back after this thing, because as I believe, at least I think, supply on the cattle tightens up as we get to the end of the year, and is even tighter in the first quarter next year. So hopefully we can put some of these fears to rest and get on down the road. Nice start to the day today, though, for sure.
Yeah. But we've talked about bull markets can't go straight up all the time, and they have to be fed. And so, like you said, a little uncertainty here in the market. I want to ask you about cash trade again, or circle back on that. Negotiated totals last week, big, over almost 95,000. So, is that going to give the Packers a little leverage this week, or what are you thinking cash will fall out like?
It's a great question, and a bit of a complicated one, because not only was there a big chunk of negotiated cattle, but there was a 20-25% increase in the number of cattle that are 15 days and beyond. So I wish that there was a little more transparency in some of that data, because a big part of me wants to think that, well, if the packer wants to buy cattle for 3 weeks out or the whole month, which in some cases is the case, our packers claim to be bought all the way to the end of October. So these packers aren't stupid. If they thought they could buy them cheaper, would they be buying something for the last of the month? I think not. To me, those, yes, will they have to bid as aggressively? Maybe not. But I think they're tipping their cards a little bit, in that they fear that as tight as supply is, They want to make sure that they've got inventory, either that or they've got enough meat sold. They just want to make sure they've got everything working. Either way, it doesn't seem to me like that is a super negative situation. But some people want to spin it the other way. I guess I choose not to. The one thing along those lines a little bit, it would seem to me is don't forget we're under delivery. It wouldn't be the first time that the first 10 days or so of a delivery month, things are a little sticky. And then all of a sudden, okay, now we've used up our captive supply that we always have a little bit extra of during a delivery month. And now we have to try harder. So that might be part of the story too.
Yeah, I haven't had any deliveries yet though, right?
No.
All right. Well, that's good news. So you mentioned the liquidation by the funds in the hog market. In fact, over half of their position last week. And some of that was probably tied to the negativity or the bearishness in hogs and pigs report. Are they done liquidating, do you think?
I think they got a little ways to go. Sitting here, I would say that they've got a little ways to go, but probably got maybe 70 to 80% of what their initiated position was. I struggle with trying to come up with a lot of brainstorms here on the hogs. I'm not crazy about the market. I think there's plenty of supply, and that comes from what I saw with the feeder pig runs and feeder pig prices here for a couple of months here earlier this year. I guess I don't want to be the bearer of bad news, but I have to mention that, China's hog prices are not very good. In fact, they're about a little over 40% below last year-on-year difference. So they must have enough hogs. Now, so far, we've been exporting enough pork that way, but we need to have perfect exports if you're going to maintain a price with the kind of supply of hogs that we have here domestically. So I'd be a little bit concerned. Hogs have been hard to trade, but we stopped again at the 40-day. Today's maybe a kind of a big day. Maybe be a little bit careful if we don't hold this little bounce we're getting early today.
Yeah, we had good pork exports on a weekly basis last week. China was on holiday, and we'll see if we get another good week this week or not. So grain market, like I said, soybeans have come back here, but we scored a new low for the move here in the process. And so do you think that market is getting close to putting its seasonal or harvest low in? We usually do, and we get close to 50% harvested.
Yeah, I sure do. I don't quite, I'm not really sold on the idea of why we need to still be bearish down here in a deeply oversold market at this time of year. Yes, I do think that there's been a fair amount of farmer selling. Basis would indicate that. It seems like the producer is more willing to sell beans and less so on the corn, and I think that's just raw price that's driving that. You've had concern over being able to navigate the river and all this other stuff. Some risk off yesterday with what if this whole Middle East thing escalates to something even worse. But today, so we made a new low overnight. Now we're trading higher. This would be a great way to make a low. Let's have a reversal up and see if it holds. That's what I've been looking for, something like that. You got a very classic looking formation on the corn of what a bottom ought to look like. A big consolidation, a little bit of an inverted head and shoulders bottom, getting a little pressure today maybe on the corn coming off of the wheat. With what looks to be a wonderful rain across a bunch of the wheat belt here coming this week. But I think we're trading corn, and at 485, I got to think that the demand's going to be better now than when it was over $7 earlier this year.
But have you been surprised, Brad, that with a 2-2 carryover that we've been able to rally the corn market in light of all that?
I have been a little bit, because certainly it doesn't appear like we're going to run out anytime soon, right?
No.
But on the other hand, one of the things that has been the big negative impact on the at least from the guys that are bearish, they keep saying, well, demand's horrible. And it has been. Exports have been lousy. Ethanol stuff has been lousy. But now look at this. Look at the spread now for these ethanol guys. I got to think that they got to be going 100 miles an hour. And, as somebody that uses corn, I can guarantee you that you use more corn at 480 than you do at 750. So I don't know. I'd like to think that we, probably don't go very far, but we stop going down, try to bounce back to 5.25 to 530. I think our rallies are limited to something like that, a trading range deal. But this would be the time of year to maybe look for a little more upside than downside.
Yeah, $5 stopped us out though on Friday, didn't it?
It sure did. We'll see. I know somebody bearish enough to sell it at 484.5 too. That's another thing, but maybe we go nowhere. The option volatility and lack thereof would tell you that that's what the option trader thinks, because the options have very little value. So maybe that's a flat deal for a little bit.
No, good point. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.